Good morning, everybody. Welcome to another daily market report brought to you by Mike Bjork. Today is Monday, and it's June 17th. Hope you guys having a great day. Hope you fathers had a wonderful Father's Day this past Sunday. We got a couple items here on the economic calendar, so we'll just jump right into it. We'll start off with the Empire State Index for the month of June, and what this is an index that indicates the manufacturing in the New York region. So we had a pretty good reading in May at 17.8. However, it had a huge drop down to minus. It dropped 8.6, so it contracted. Instead of being an expansion, this one tells us it contracted in the month of June. So that's obviously not a very good sign here. Next up on the docket is the NAHB Home Builder Index. This is a survey that's brought out and gives insight onto the confidence level for home builders out there. And as you can see, anything above 50 is considered expansion or optimism. And so we're still in decent territory, but as you can see here, it did slide a little bit from May, which had 66 down to June at 64 at this month. So things are not as rosy as before. People are starting to see things are slowing down a little bit economic wise. They're pretty happy with the way things were. They're still, it's still not horrible or anything, but it's they are seeing some slowdown in some areas. So let's jump ahead here. Headline news: stock market is up. Its focus this week is on the upcoming FOMC, which begins its two-day meeting tomorrow and give their announcement on Wednesday. There are a few economists out there that are projecting a rate cut at this meeting, but for the most part, it's a pretty low chance of them raising at this meeting. I think it's about 27%. However, the July one is a pretty high one. Most investors or most economists are projecting a rate cut in as soon as July's meeting, about 87% chance. So the reason that many don't think the Fed would cut rate hikes this time is primarily because they want to set the stage for the next one. They want to try to be as transparent as possible, and by doing it this time, it would be viewed more as an emergency or a crisis, and it might spook the markets. So in this scenario, they want to set the stage for the next one, and they think so next one most likely will be a rate cut. Now, they'll be looking at a couple different things. They're going to look at the language because they'll probably remove the patient. They're going to look at the dot plot. They want to see if potentially there could be two rate hikes. There's some believe that there could be as many as two rate hikes this year versus just one or even a single one. So they're going to be looking at that coming up. You'll see that again late Wednesday, probably by 11:15 Pacific Standard Time, which is when typically they give their announcement, and then you can see the information from that point. So let's take a look here, see how this is affecting the bond market. The bond market is down so far this morning. We're down about 6 basis points. Not quite enough from where we left off. So we're 6 basis points from where we left off on Friday. Friday we were down a little bit too, but not quite enough. Because as you can see here, we were up higher for the day than we were the Thursday, and then now we dropped down a little bit. So not quite yet enough to be where we are right now for a rate for mortgage rates to rise. So right now I would say mortgage rates are unchanged. If it continues to slide a little bit further down, then yes, I think you'll see, and that might be priced in more tomorrow, depending on how rapid, if there's any real rapid drops or anything here. And we do got this floor of support here just above the 25-day moving average, which will be kind of hovering this range here for pretty much this whole month here, as you can see here. And then same thing with the yields. Yields are kind of at the low level. They're kind of sitting at its floor right now. It's at about 209. The 10-year yield is sitting around 209. All right, folks, that pretty much gives it a wrap for the day. Again, tomorrow we'll start the FOMC meeting. That's the big news item this week. They want to kind of gauge to see if there's going to be their foresight into or any speculation on any possible rate hikes this year, and the language and everything else they're going to be looking at this week. All right, folks, you guys have a great rest of your day. Thanks so much for watching. I'll catch you guys tomorrow. Bye-bye.